Welcome to the tutorial on consignment accounts. This is the second part of this tutorial. In this second part of this consignment account, we are going to learn about the entries that should be prepared in the books of consignor. Here, consignor means the principal, the producer or wholesale marketer. The primary objective of preparing the consignment account is to determine the profit and loss for each consignment separately. Generally, the consignment account is prepared along with the name of the consignee. Suppose Obaidul is a consignee and the consignor will prepare a consignment account with the name of the consignee. Suppose consignment to Obaidul, or the consignor can prepare the consignment account with the name of the place of the consignee or name of the consignee. However, in the consignment account, we show this item in the debit side. The name of the item that should be shown in the debit side are opening stock on consignment, cost of goods sent on consignment, expenses incurred by the consignor, as for example, freight, insurance for sending the goods by the consignor, as well as expense incurred by the consignee, as for example, unloading charges, ground rent, or any other expense. And at the last stage, we have to show the commission. So in the consignment account, we will show opening stock, goods sent, expense by the consignor, expense by the consignee, and commission in the debit side. On the other hand, in the credit side of the consignment account, we will show gross sales proceed, revenue from the sale, and the closing stock. If there is any profit from the consignment, then the profit and loss from the consignment account should be transferred to the general profit and loss account. Besides the consignment account prepared by the consignor, there is a necessity to prepare consignee account. That means the consignor will also prepare consignee account. In the consignee account, the gross sales proceed, the sales revenue should be shown in the debit side, and in the credit side, the consignor should show advances made by the consignee, expense incurred by the consignee, and the commission that is payable or received by the consignee. I am repeating, besides the consignment account, the consignor also prepared the consignee account. In the consignee account, debit side includes the gross sales proceed, and in the credit side shows the advance made by the consignee, expenses incurred by the consignee, and the commission received or receivable by the consignee. And if there is any balance, that balance represents the due amount to the consignee. However, we can prepare the consignment accounts based on the two price. It may be cost price or it may be invoice price. Now we are going to learn about the incomplete consignment and valuation of closing stock. Sometimes all the goods sent by the consignor will not be sold by the consignee. That means there may be any incomplete consignment. That means if there is any unsold stock, then those unsold stock should be valued, and the journal with the value of unsold stock will be stock on consignment account debit, and consignment to, here you should mention the consignee name. In the credit side, consignment to, suppose you are sending the product to Mr. Obaidul, then consignment to Obaidul. Whenever there is any unsold stock during the consignment process, then those stock should be valued, and the journal would be stock on consignment account debit and consignment to consignee account credit. And the balance of this stock should be shown in the balance sheet, as well as in the next year you have to convert this journal as follows. We can see consignment to consignee account debit and stock on consignment account credit. In the valuation of consignment stock, I mean the valuation of unsold stock in the process of consignment, we can apply the cost price method or market price method. Whichever is lower, we should apply the lower amount of cost price or market price. In determining the cost price, we have to consider the expenses incurred for bringing the goods to the sellable condition, as well as expenses incurred for the sending goods to the consignee. As for example, we can see for sending the goods, the consignor may need to provide the freight, carriage, export or import duties, insurance on goods sent, loading and unloading charges. Sometimes the unloading charges are provided by the consignee. That means the expenses that incurred by the consignor and consignee until the unloading should be considered as the expenses for determining the cost price, and this cost price or market price, which one is lower, should be considered as the value of the unsold stock. Which expenses should be considered for calculating the cost price? We can see the non-recurring expenditures. The non-recurring expenditures includes those expenses which occurs until unloading. After the unloading by the consignee, there may be some other expense, but those expense should not be considered. Until unloading, you have to consider those expenses for determining the cost price for the valuation of unsold stock. For easy understanding, I have given some example. These are the costs which should be ignored, because this cost may arise after reaching the goods in the place of consignee. After unloading or after reaching the goods to the consignee, the cost that occurring after the unloading should not be considered for cost price that is used for the valuation of unsold stock. We can see the cost which should be ignored for valuation of unsold stock are godown rent, carriage on sales, establishment expenses, insurance for godown, or any other selling expenses. This cost will not be considered for determining the cost price. This is the format you can use for the valuation of unsold stock or closing stock in the process of consignment. You can see the cost price should be shown. With the cost price of goods sent, you have to add the expenses incurred by the consignor. You can see the freight, carriage, loading and unloading charge, insurance on goods sent, export import duties, dog dues. These are the expenses incurred by the consignor. All the expense incurred by the consignor should be added to the cost price of the goods sent, as well as some of the consignee's expense, as for example, cartage charge, landing charge, unloading charge, until unloading. After the unloading or after reaching the product, no cost should be considered. Until unloading, the cost of the consignees could be considered. Along with the consignor expenses and consignee's expenses, the cost price will be the total cost price. And the formula we can use for valuation of closing stock is the total cost should be shown above, and that should be divided by the total quantity, I mean total goods sent. Then we will get the per unit cost. With the per unit cost, we will multiply with the unsold quantity to get the value of closing stock or unsold stock in the consignment process. If there is any goods which are in transit, then the expenses of the consignee should not be considered in determining the cost price in the valuation of stock in transit. That means if there is any goods that are still in transit, the expenses of the consignee are not considered for the valuation of stock in transit. However, after determining the cost price, we have to compare the cost price with the market price. In determining the market price, we have to consider the net realizable value. And in this net realizable value, we have to consider all the expenses that is needed for selling the products. Besides, we have to consider the commission that is payable to the consignee. However, after determining the cost price and market price, we should consider the lower one. If the cost price is lower, then we will consider the cost price as a value of the unsold stock. But if there is no available information about the market price, then we will assume that generally the market price is higher. That's why cost price will be used for determining the value of the unsold stock. Now we are going to learn the journal entries that should be made by the consignor. And for journal entries, we are going to apply the cost price method. The first journal for sending the goods to the consignee is consignment to consignee. Here you have to mention the consignee name or the name of the place where the consignee is situated. However, for sending the goods, the journal is consignment to consignee and the credit is goods sent on consignment account. And for doing this journal, we have to apply the cost price. And if the consignor pay any expenses, then the journal is consignment to consignee. I mean, this account will be used for the cost price as well as for the expenses made by the consignor. That means debit is consignment to consignee. I mean, you have to mention the consignee name. And on the credit, you have to show the cash or bank account if you pay it. But if you did not pay, then you have to show creditors or accounts payable for the expense account. And after sending the products, if the consignor receive any advance from the consignee, then the journal is cash or bank account debit, consignee account credit. On the other hand, if the consignor receive any bill, then the journal is bills receivable account debit, consignee account credit. And the next journal is for account sales that is provided by the consignee. I mean, after making any sales, the consignee prepares the account sales, and after receiving the account sales, the consignor should prepare this journal. We can see there are 4 journals after receiving the account sales. This journal should be made by the consignor. We can see the first journal is for sale of goods. Here, consignee account debit and consignment to consignee credit. And for the expenses, incurred by the consignee should be shown as consignment to consignee account debit and consignee account credit. For commission, same journal. Expense and commission, same journal. Consignment to consignee account debit and consignee account credit. I am repeating, this journal should be prepared by the consignor after receiving the account sales. And if the consignor receives the remaining amount after deducting the expenses and commission by the consignee, the journal would be cash or bank account debit, consignee account credit. And if the consignee completes the sales before the end of the consignor accounting year, the consignor closes the consignment account by passing the following entry. The first entry is when there is a profit, then consignment to consignee account debit, profit and loss on consignment account credit. Or if there is a loss, there will be an opposite journal. We can see profit and loss on consignment account debit, consignment to consignee account credit. We can see there is a note which is indicating that this journal is prepared whenever the sales are completed before the end of the accounting period. That means before ending the accounting period, if the sales are completed, then we are using this profit and loss on consignment account. It's a temporary. At the end of financial year, the consignment account is closed by the following entries. We can see if the consignor is a manufacturer, then the journal is goods sent on consignment account debit and trading account credit. But if the consignor is a wholesaler, then instead of trading account, we will show the purchase account on the credit side. So these are the initial discussion for the journal entries that should be made by the consignor using the cost price. I am going to show a practical illustration. Here we can see one illustration is given for your easy understanding for making the entries in the book of consignor. We can see, suppose on 1st March 2022, Korim, here Korim is the consignor, okay? Korim is the consignor, I mean the principal. Korim of Dhaka sends 1000 boxes of tea to Badal of Chittagong. Suppose here Badal is the consignee, that means Mr. Badal is the agent. Okay, so Mr. Korim, consignor, sends 1000 boxes to consignee, I mean Badal, on the basis of consignment. Each box cost 500. Okay. During this sending process, Mr. Korim, I mean the consignor, pays railway freight, insurance. After receiving the product by the Badal, Mr. Badal provided a bill that is amount of 2 lakh for 3 months, which was duly accepted and returned. I mean, after receiving the product by Badal, Badal is the consignee. Mr. Badal provided a bill to Mr. Korim. That bill is receivable after 3 months. Here we can see the bill is accepted and returned. However, on 13th September 2022, Badal is the consignee who has forwarded an account sales. We know account sales are prepared by the consignee after selling the products or goods. However, Mr. Badal forwarded an account sales to Korim showing that 500 boxes have been sold at the rate of Taka 560 and 300 boxes were sold at the rate of Taka 550, and the remaining box, I can see the remaining box is 200 because 500 is sold here, 300 is sold here, that means 500 plus 300, I mean 800 sold. Then the remaining box indicates the 200 box. So 200 box were sold at the rate of Taka 540. The expenses incurred by Badal, here Badal is the consignee agent. The expenses incurred by Badal consisted of carriage charges 500, go down rent 3500. As well as the Badal will receive 5% commission on the sale proceeds. Sale proceeds means the sales revenue. And there is another information. Mr. Badal, the consignee, encloses a check for the balance due to Karim. That means after selling, Mr. Badal deducted all the expenses incurred by him. From the sale proceed, Mr. Badal deducted this carriage charge, go down rent and commission, and the remaining amount is provided by check. Now the requirement is show how this transaction would be recorded in the books of Karim. Here Karim is the consignor. That means we are going to learn about the journal entries that should be done in the book of consignor. Here the consignor is Mr. Karim. Assuming that the bill of exchange was made on its due date. That means Mr. Karim received a bill from consignee, and here the indication is that assume that the bill is received in cash or bank. Also assume that Karim closes the books on 31st December. So for this information, what would be the journal entries? So for sending the goods, the journal is consignment to Badal. Here Badal is the consignee. Okay, consignment to Badal, total 5 lakh. We can see 1000 bucks. We can see here 1000 bucks at the rate of Taka 500. Total amount is 5 lakh. Okay, so journal is consignment to Badal account debit, goods sent to consignment credit. Since Mr. Karim, the consignor, has paid some expenses, we can see freight 4000, insurance 2000. These two expenses should be considered. The journal we can see consignment to Badal account debit 3000, and cash account, since cash is paid for this 1000 and 2000, total 3000, so cash is credit. And we can see Mr. Karim also receives the bill for 2 lakh. So what is the journal? Bills receivable debit 2 lakh, and Mr. Badal account, here Badal is the consignee, so Badal account credit 2 lakh. So bills receivable debit 2 lakh, Badal account debit 2 lakh. This journal is for receiving the bill by the consignor. But at the end of the information, we can see the bill is received in cash. We can see that the bill was prepared for 3 months. The bill was prepared on 1st March. That means the bill will be received in the June. Since there is an indication of receiving the bill in cash, that means the journal would be bank or cash. Bank debit, and here at the time of receiving the bill, we have shown it as a bills receivable, but after receiving, we will show it in the credit side, bills receivable credit 2 lakh. And now we are going to prepare the journal entries for this information. We can see Mr. Badal, who is the consignee, that consignee forwarded an account sales mentioning the sales proceed, as well as he also mentioned the expenses incurred by him and the commission that is receivable by him. So for this information, the journal would be whenever the sales are done, then Mr. Badal, here is a consignee account debit. We can see 500 bucks at the rate of 560, 300 bucks at the rate of 550, and 200 bucks at the rate of 540. This information are taken from this writing. We can see these are the sales proceeds. So total sales proceed, sales revenue is 5,53,000, and the credit side should be consignment to Badal account credit. Whenever you are selling the products, consignment to Badal account debit, and after selling, consignment to Badal account credit. And for the expenses that was paid by the consignee, Mr. Badal has provided some expenses 500 and 3,500. The journal would be consignment to Badal account debit and total account credit 4,000 amount. And we can see the consignee is entitled to receive the commission at the rate of 5%. Then the journal would be consignment to Badal account debit and Badal account, here Badal is consignee account credit. We can see what is the amount of commission, 5% commission on the sales proceed. What is the amount of sales proceed? This is the sales proceed or sales revenue. The commission should be computed on the sales proceed. Here the amount of sales is 5,53,000. Total amount of commission is 27,650. And we can see there is an indication that Mr. Karim receives the due amount of payment. I mean, Mr. Badal, who is the consignee, has paid the remaining amount. Remaining amount means after deducting the expenses and commission from the sales proceed, the consignee, Mr. Badal, paid the amount. What is the journal? We can see bank account debit and Mr. Badal account credit. What is the total amount? We can see this is the sales proceed. From this sales proceed, the 2 lakh is paid. We can see 2 lakh is paid in the initial stage. This 2 lakh is deducted. Then this 4,000 expense by the consignee and this 27,650 is the commission by the consignee. By deducting the initial amount that was paid, by deducting the expenses and by deducting the commission, the net amount is 3,21,350, that is paid by the Badal, I mean the consignee. That's why the consignor, we are making the journal entries in the book of consignor. So the consignor will record it as bank account debit and Badal account credit. And from this consignment account, if there is any profit or loss, that profit or loss should be recorded as consignment to Badal account debit. If the selling is done before the end of the year, then this profit and loss on consignment account is prepared for a temporary base, because this profit and loss on consignment account will be transferred at the end of the financial year. However, we can see this journal is for profit. We can see consignment to Badal account debit and profit and loss on consignment account credit. So what is the amount of profit? You can see initially the cost price is 5 lakh, okay, but the selling price is 5,53,000. So this is the cost price of goods sent and this is the selling price. From this selling price we will deduct the cost price as well as the expenses done by the consignor as well as the expenses receivable by the consignee. Here you can see consignee expense 4,000, consignee commission 27,650 and the consignor expense is 3,000. So we will deduct this 5 lakh. This is the cost price. This is the consignor expense. This is the consignee's expense. This is the consignee's commission. So after deducting this 5 lakh cost price of the goods sent, 3,000 cost by the consignor, 500 and 3,500 cost by the consignee, and 27,650 commission. After deducting all the expenses of consignor, consignee, commission and cost price of goods sent, after deducting all the expenses, we can see the amount of profit is 18,350. And journal is consignment to Badal account debit and profit and loss on consignment account credit. Since this is a temporary account, we need to transfer it to the original profit and loss account. That's why at the end of financial year, we will transfer here the profit and loss on consignment account credit. For transferring it, we will show it in the debit side, and we are transferring the profit to the original or general profit and loss account. That's why profit and loss on consignment account debit and profit and loss account credit. And since the consignee sold all the products, then we have to adjust this amount of goods with the purchase or trade account. If the consignor is a manufacturer, then trading account will be credit, but if the consignor is a wholesaler, then the purchase account will be credit. Goods sent on consignment debit, purchase account credit. So these are the journal entries for recording the issues in the process of consignment. And after making the journal entries, we can prepare the ledger. So preparing ledger is very easy. I am going to show the process of preparing ledger for one account, and you can follow the same process for preparing the other ledgers. Let's see, suppose we are going to prepare the ledger of consignment to Badal account. So this is the ledger consignment to Badal account. So here consignment to Badal account is debit with the amount of 5 lakhs. So this is debit. We have to write down the amount in the debit side. You can see this is the debit side, this is the credit side. So we have shown this amount in the debit side, and in writing the name of accounts, we have to write the opposite name. Here opposite name is goods sent on consignment. So goods sent on consignment, we have written the account title of the opposite side, and we can see the consignment to Badal again debit with the amount of 3000. We have written it in the debit side. So what would be the account title? The opposite one, we can see the cash account. So cash account 3000. Again we can see consignment to Badal. Here it's shown in the credit side with the amount of 5,53,000. So consignment to Badal, we are preparing the ledger consignment to Badal, and here consignment to Badal is shown in the credit side. So this amount is written in credit side, and the title would be debit one. We can see the Badal account. So here Badal account debit. In the same way, we can see consignment to Badal debit. So 4,000. So we should write the debit 4,000. So here 4,000 is separately shown, 500 and 3,500. So here 500, 3,500. So what is the opposite name? Badal account. So Mr. Badal account. This 500 for cash, this 3,500 for go down rent. Again we can see consignment to Badal account debit 27,650. So 27,650. This is shown in the debit side, and what would be the opposite name? Badal account. Badal account is shown here for the commission. And the last one is here consignment to Badal account shown in debit side with the profit. We can see 18,350. So debit side 9,350, and the opposite name is profit and loss on consignment account. Profit and loss on consignment account. So simply we are preparing this account. If the amount is shown in the debit side, we will write the amount, but in case of writing the accounts title, we should write the opposite name. And this way we can see this is here 5,53,000 put up here. So this is the example of one ledger account. In the same way, you can prepare the ledger account for other accounts. We can see goods sent on consignment account, cash account, Badal account. These are the other ledgers that could be prepared by following the same procedures. You can see this is the ledger of goods sent on consignment, this is the ledger on Badal account, this is the ledger on profit and loss account, this is the ledger on bills receivable account, this is the ledger on purchase account inclusive, that means it's the short, and profit and loss, this is the short form because all other information are not available, just with the one information. That's why it's a short specimen of profit and loss account. However, in this way we can prepare the ledger accounts. After making the journal entries, you can prepare the ledger very easily. In the next tutorial, in the third part of this tutorial, we are going to learn about the journal entries that should be prepared in the book of consignee. Thank you.